Good morning, students. This is Miss Jackson, and I'm sitting here with my first period, and they're working and having fun in here. So I am going to go over with you journalizing and posting entries for accrued expenses. With 21-1, we did accrued sales, accrued revenue, where we had loaned the money, and now we're working on accrued expenses, where we borrowed the money and we're paying back our bills. So first of all, here are our instructions, which are also on page 628 of your text. 627, I sit corrected. And we are Powers Corporation. And this is December 31st, 90 days, 12%, dated December 1st. So here goes. Number 1, plan the adjustment on the worksheet. Let's look at this again. We have 90 days, 12%, 2,000. But we're only looking at the time between December 1st and December 31st. So that will be 30 days. So that is 30 days time, 30 over 360 times 12%, which is 0.12, times 2,000. $20. So our interest expense for this time period is $20. So it's a $20 debit and a $20 credit for interest payable. And now we just note that on General Journal, page 14. Adjusting expenses, adjusting entries. December 31st. Debit interest expense, credit interest payable, $20 debit, $20 credit, and now we need to go ahead and post those. First, an interest expense, December 31st, coming from General Journal, page 14, $20 debit. Added to this $20 debit balance is $84.97. Then we need to have this $81.05 up here. Next, we have interest payable. December 31st. Post reference G14. Credit of $20. Credit balance of $20. All right. Next thing. Journalized and posted our adjusting entries. Now we have to post our closing entry for interest expense. So we're closing interest expense. Closing entries. At the end of the year, December 31st. So when we close our expenses, we have to credit those. So we credit interest expense and debit with account, income summary. Memories from way back when. Uh-oh, did you catch this? I need to put my account number for interest payable up here, 2110. All right. Now, how much do we have to close for interest expense? Really good question. Let's look at that ledger. $84.97. So to close that, we have to credit it for $84.97 and debit that income summary for the same amount. So let's go ahead and do that here. 31 G14, debit of $84.97, and when we close, Ms. Jackson, credit of $84.97. Why is it credit? Here's interest expense. credit of interest expenses. We have to make that 0. And the interest expense up here, the account number is 8105. Now we need to post for income summary. I'm remembering this time. December 31st. This post reference is from G15. Debit of $84.97. Debit balance of $84.97. And account number to post that in the General Journal was 3120. Please push pause anytime you need to do so during this video so you can get your work entered. All right, we're on number 4 already. Number 4 asks us to do what? The reversing entry. The reversing entry. So to do a reversing entry for interest expense, we have to debit interest payable, credit interest expense. So we have to reverse this on page G15. December. No, reversing is in January, beginning of the year. And we have to type reversing entry. Reversing entries. Debit interest payable, credit interest expense for $20. I'm going to do a quick check, make sure I'm leading you correctly. Yeah, wonderful. So now let's post these two. January 1st from G15 in interest payable, debit of $20 with a credit entry, 0 in both columns. 2110 here. And then interest expense. January 1st. G15. Interest expense is credited. From 0 gives me a $20 credit balance. 8105 coming from there. Remember, push pause anytime. Last one! Yay! We're paying the bill. We're done with this note. We can burn the note. So, journalize. The payment of cash for the maturity value of the note on March 1st, check number 543. Use page 25 of the Cash Payments Journal. So we're paying the note. Therefore, we go to the Cash Payments Journal, page 25. Maturity date, March 1st. Debiting notes payable. Credit, debt also debiting interest expense. Notes payable was $2,000. How much is that interest expense? Well, it's a 90-day note, so that's 90 over 360, times the note is $2,000, times the interest amount is 12%, so $60. And how much cash is being credited, paid? $2,060, adding these two together. What's our check number? 543. All right, we just have to post and then we will be done. Post first to, guess where? Yes, notes payable. March 1st. Coming from CP, that's page 25. There's your 25 right there. Post reference 2105. What are we posting? A debit of $2,000. With a credit entry, 0. We now have 0 note. That's why we can burn it. We owe no more of that note. Then interest expense. March 1st. CP 25. Same page from when I slid over a minute ago. Debit entry of $60 with a credit balance, $40 difference. Debit balance of $40. Then we have 8105 up here. Done. All right. Happy adjusting, journalizing, reversing, posting, and paying. We're done.